All right. All right, guys, we are here today. Let me share my screen. Netflix reacted negatively to earnings. We're looking at these now. Uh, yeah, I mean, look, we're not really. Yeah, yesterday Netflix reacted negatively to earnings. Let me see. Let me get my CFTC rule post down here. There we go. Got that up. We can zoom in here. Let's get some music playing. Yeah, today we have we've got Amex, Procter and Gamble, SLB earnings, WIP or WIT earnings. Nothing really big. Next week's when the big earnings are supposed to drop. Monday next week we got Verizon, Albertsons. Monday evening we got Cleveland Cliffs and a couple other ones. Monday's kind of slow next week. Tuesday is when the big ones come out, where we got GM Monday morning or Tuesday morning, UPS Tuesday morning, Pepsi Tuesday morning, Lockheed Martin Tuesday morning, Spotify Tuesday morning, RTX Tuesday morning, JetBlue Tuesday morning, Halliburton Tuesday morning, Philip Morris Tuesday morning, Danaher, Sherwin-Williams, Quest, Ryder, Bank of Cali, a bunch of other ones to be honest. Polaris releases earnings Tuesday morning, and then Tuesday evening is when the biggest ones of the week show up, which is Tesla, really specifically Visa, Enphase, Texas Instruments, Steel Dynamics, Chubb, Seagate, Baker Hughes, Mattel, a bunch of other ones. And then Wednesday morning next week we got Boeing, AT&T, Humana, General Dynamics, Boston Scientific, Thermo Fisher, CME Group, a bunch of other ones too. Wednesday evening you get Meta, IBM, Ford, Chipotle. So we're going to stream Tuesday, Wednesday evening for sure. Thursday, I believe it's Thursday when the big ones come out. Thursday we got Microsoft, Google, Snapchat, Roku, Intel. So yeah, we're going to stream it looks like every day next week. We're going to stream every day for earnings next week. And then also at the end of next week, we have GDP data Thursday. So GDP data. So for all the people yelling recession, tomorrow's going to show us, or next week's probably going to show us we're not in one. Friday, we have PCE data, inflation data, right? So very relevant data next week as well. We'll see what happens. Looking at Netflix numbers here. Netflix did release. Oh, man, sorry. I'm trying not to. All right, so Tesla has to recall certain 24 Cybertruck vehicles over unintended acceleration from trapped pedal, according to NHTSA. So this is news that came out. I saw this a few days ago. So here's news about Tesla recall. See if I can go all the way back to Tesla earnings, though. I'm seeing midnight. I gotta keep on scrolling. Alright, let's find Netflix. Alright, so Netflix posted. Worst quarter 2 EPS guidance. Beats EPS of 528 versus 451 estimates, and sales better than expected as well. Worst guidance. Here's Netflix's numbers. Again, they had worse guidance. No, they guided good for second quarter EPS, I guess. Adjusted EPS was good. I don't know why Netflix is down. I think Netflix is just up so much already. Maybe we'll buy a dip. I don't know. What's up, Isaac? Netflix guys for full year 24 revenue growth of 13 to 15%, operating margin seen at 25%. They said, quote, we now expect fiscal year 24 operating margin of 25% based on FX rates as of January 1st, up from our prior forecast of 24%. Trying to yawn. What's up, Danny? And again, you can kind of see Netflix numbers. Netflix is down though. All right, chat. I hate it when you gotta verify something. Let me see, verification at Bovada. All right. All right, chat, bear with me here. The market is not very healthy right now. I'm waiting to spend some morning, brother, morning chat. Let's get it. What's up, IV? I see red today, but people don't want to be stuck during the week and with this geopolitical tension, but I hope for a green Monday. Yeah, we'll see. Again, earnings season is going to be a big catalyst next week. Earnings season is going to be big. So, again, we'll see what happens, but yeah. All right. So yeah, bear with me, chat. All right. All right. Sorry, I had to do something, work on something. It lets me send these pictures. Yeah, it should let me send. Bro, the funny thing with my ID, bro, like if you look at my driver's license. No, I'm here. If you look at my driver's license, bro, it's literally a picture of me when I was 22 years old. I was 22 years old when I took, and again, I give my ID to people and they're like, they look at me and then they look at my ID and they're like, bro, this is you from freaking a decade ago, dude. What are you doing, man? I'm like, I know, I know. They're like, you don't look like this anymore. I'm like, I know, man. Just tell me I'm old. Listen. And I always have to tell them, like, look, you can order your ID. You can order your driver's license online. You don't have to go to the DMV to get it, right? They'll just reuse your old picture from a decade ago. So you will never get a new picture. I still have my old picture from freaking 10 years ago from the DMV. And every time I hand it to somebody, they look at me crazy. It's all right, Oh, that's top 3 best looking driver's license photos in the world right now, dude. You don't know, man? I hand that ID to people, they're like, dang, bro, that kid's handsome, I can't help it. I just gotta do what I gotta do. Hey, what's up, KD? I gotta find my driver's license. I haven't seen it in 2 months. Well, sorry to hear that, bro. Again, tech is down. Netflix is down. So that's kind of dragging everything else down with it. All right, what's up, pawn? So again, we did get funded on a $100,000 account. You love to see it. What's up, JoJo, Beach Bum, Pawn, KD, Jeffrey, Isaac, Par. In Germany, no driver's license renewal is necessary, so pick us from 24 years ago. Hey, that's the way to do it, man. Everybody hates the DMV. I'm sure that's like universally the truth, which is that everybody hates the freaking DMV, dude. The last time my wife and I went to the DMV, the lady was so mean, bro. This old white lady was just the meanest lady she could ever be. Just rude. You know when you're nice to somebody and they're just rude back to you? And you're just kind of like, look, lady, I didn't do anything to you. You're like, hey, how you doing? They just ignore you. Just kind of like, damn, lady, what's your problem? We still remember that lady. She was so mean. We talk about it like a year later. Like, remember how mean that lady was? Just mean. Yes, ITA. I'm pretty sure it is. If you want to get the actual live funded, you gotta show consistency in the PA, but they'll still pay you on the PA account, I think. But you gotta check with them. That's outside of my realm. ITA. Reach out to them and ask them, brother. But I'm pretty sure. I think Netflix did pretty good for earnings, but they're up so much. Netflix has had a powerful year. I remember somebody was bearish on Netflix, at like up here at like 5s. And I remember telling them, hey, look, I think Netflix, my argument for Netflix has not changed, right? People might say I'm repeating myself. My argument has not changed for Netflix, which is that, people can hate it. I think it's cool to hate Netflix nowadays, right? But I think adjustments to password sharing is going to, help their bottom line. Number 2, they're producing higher and higher quality content, and they really are. They're producing their own movies, and they're changing the standard of how movies are made. So they're producing in-house movies now, getting big actors to do it, publishing them for free. They're holding Jake Paul Tyson fight. Like, they're doing a lot of big things, and I think Netflix is the most popular streaming app by far. It's not even competitive with the other ones, in my opinion. And I think Netflix is going to be fine long term. Now, short term, there might be fluctuations, but I think they're up so much. If you look at them, they've almost doubled this year. They've gone from 315 to 610, so they've almost doubled this year. Yeah, and now they're down to 570. So they're down a little bit, but they still had a really, really good year for tech. For a company that's not AI based in tech, that's a really good year. You know, up 100% basically, maybe a little bit less now after down at 570, maybe like 85% right now. That's a really good year. 85% gains in a year on any stock, on basically doubling your money, is obviously very good gains. And I think, that type of extension, even though they had good earnings, they had good guidance, they had good EPS, good revenue. I think that type of extension's there, and that's why we underreacted to earnings, is because we're just up so much already. We hit 640s though, so that's nice. Okay, I'm green on Snapchat. What happened to Snapchat? Somehow I'm very green on it. Okay. I'll take it. Yeah, so here's the Netflix highlights. They revenue beat, EPS beat, 9.33 million paid subs, ad tier plan update, and more. So good earnings. Maybe it's time to buy the dip. You think it's time to buy the dip here for Netflix? Like, just a call, like, not a huge share size. But, Netflix was once like what, $700-800 a share, right? If we put up a weekly chart, yeah, they were once $700 a share. So if they're going back to their former glory, I think there could be a dip by argument. I'm gonna buy a couple shares, not a huge position here for Netflix, but I'm gonna buy a little bit. I was already in it. I think I covered my Netflix position sometime over the last couple months, but I'm gonna add back to it now. Oh, it won't let me. I can't add back to it. I gotta wait. I gotta wait 13 minutes until I can add. Nvidia is the tulips craze of the 2020s. So is Bitcoin, for that matter. Look at the price of gold. Yeah, I mean, maybe, maybe better. Again, I talk about it before, but, I'm going to give you the numbers behind Nvidia. So Nvidia in this latest craze has gone up about 3.4x, right? They've gone up 3.4 times their previous value 52 weeks ago, exactly a year ago. They've gone up 3.4x. Okay. Their earnings per share have increased 6x'd in this period of time. So their earnings have 6x'd. They've gone up 6 times what they were a year ago. Their earnings, their EPS, their margins, their earnings per share have gone up 6 times what they were exactly a year ago. Their revenue has 3x'd. And again, the same period last year. And so the question I have with all people that say Nvidia is a big bubble or whatever is, how do you explain that? How do you explain that? Again, I'm not disagreeing with you. You might be right. I think Nvidia's up a lot, and I think it could come back some. And I think if it does, that's the biggest risk for a market crash anytime soon, aside from the Fed keeping interest rates up too long. But how do you explain that? If it is a bubble, how do you explain that? I guess is the question. Yeah, I know about the tulip mania thing, But again, what I'm asking though is that if Netflix is earning more money, if Netflix's increase, okay, here's the easiest way to put it. All right, Netflix's earnings power increased, right? Simultaneous to that, Netflix's price increased. Right? So it's not like one happened and not the other. It's not like Netflix's price increased, but their earnings stayed flat. Right? It's not like that happened. In fact, again, Netflix's earnings have 6x'd. They've gone up 6 times their value. And Netflix price has 3.4x. So it's not even keeping up with the increase in earnings that they've done. You know what I mean? Like, that's the way you got to look at it, I think. And again, if it is a bubble, how do you explain that? I'm not saying you're wrong. I'm just asking. Microsoft down a lot yesterday, too. But yeah, look at Netflix down here, 570s. Q up there. We got Nvidia at 840s. Yeah, and I usually give this argument, and then I hear crickets, man. I never hear any argument back. People are like, yo, Netflix is, or yo, Nvidia's in a bubble, bruh. And then I'm like, hey, well, their earnings power is 6x, and they've only gone up 3.4x their previous price. You know, how do you explain that? And then it's just kind of silence. Like, I'm genuinely curious to see what people's arguments are. I'm open to listening. I'm not even saying I disagree. I think, you know, I think anytime you have a big parabolic move in price, you can get corrections. And so I think anytime you get a big move up in price, you can get corrections. I don't know if like, you know, it's not like Netflix has increased without earning more. They're earning way more now. AI chips are needed right now. That's just the truth behind it. At the peak of tulip mania in February. Yeah, but we're correlating tulips to Nvidia. And so I guess in that regard, like, look. Tulips had no utility whatsoever, you know? Like, people weren't buying them for their utility. They were buying them as kind of like a currency. You know, like gold is kind of what they were. Like, it would be more correlating to the tulip mania with gold. If gold ripped up too much and we were correlating the gold increase to tulip mania, even though gold has been one of the better inflation hedges in history. My point is, Nvidia chips are valuable. People buy them. People need them. People use them, right? It's not like, I guess the point, it's not like people are buying Nvidia chips and then just not using them. They're not buying Nvidia chips for a store of value. Right, and then if you're going to compare Nvidia chips to tulips, it's a bad comparison, right? That's the first thing. If you're going to compare Nvidia stocks, like Nvidia shares, to tulips, then it doesn't match up either, because again, Nvidia actually has the earnings power to justify the increase. You know, it has increased its earnings power more than it has increased its price percentage-wise. Is the easiest way to put this. And so, again, I don't know. We could be in a bubble, but I don't think it's something where we're just so extended on the upside where we have to come back down. I think, for lack of a better words, that's bearish propaganda. I think that we could come back down, and I think some people want us to come back down because they either missed out on this latest run, and sometimes if you miss out on something, you know, you just kind of want it to not be there. But I think the reality of it is, again, I'll say it again, Nvidia has increased its earnings power more than its share price percentage-wise, right? And I think that's a hard thing for people calling Nvidia a bubble to explain, because if it is a bubble, the share price should have increased, you know, way more than its earnings power, right? Like, that's what a bubble is, when something's simply up too much. And so I don't know. I think it's an interesting look, but oh, I could be wildly wrong, as always. I might be. In fact, I probably am, you know. Right, but the PE ratio, Weed the People, is the same, is actually better than it was 52 weeks ago. You know? So the PE ratio for Nvidia is better than it was 52 weeks ago, before everybody was calling it a bubble. You know? And so again, how do you explain that? Genuinely curious. If I'm wrong, again, tell me. Don't just say I'm wrong. A lot of people will be like, yo, you're wrong, and then they just don't ever say anything. And again, maybe I am wrong. I might be wildly wrong, as I say. In fact, let me put this banner up here. Remember, I'm terrible, have no idea what I'm talking about. May be wildly wrong about anything I say. This content's for entertainment purposes, and my experiences, wins or losses, may be conducted off stream. I might trade off stream, and you might not see it. Don't judge me. Do not copy me. I have no idea what I'm talking about. And again, I might be wildly wrong about this tulip argument or whatever it is. Understand CFTC 4.41 and all that good stuff, chat. Yeah, and again, like, I get people being bearish, like, I really do. I guess I just don't understand, like, look, in the game of stock market, right, the bears are the biggest losers. Like, let's just be honest here for a second and look at it objectively. I'm not attacking you. I'm not calling you I'm not calling you like a stereotypical loser here. What I'm saying is that in the game of the stock market, long term, bears lose, right? Specifically bears if you're talking about shorting the S&P, the Nasdaq, blue chip stocks, Apple, Amazon, Google, whatever. Bears lose, right? So I never understood why there's so many people betting against the market. Like, you got to question whether people just kind of get led into it, whether they just get emotional about it. I'm not saying the market's never going to come back down. Obviously, we're going to get crashes roughly every decade or so, sometimes longer, sometimes shorter. I think we've gotten an awful lot of corrections already, though, in the last 5 years. 2020 correction, we got a pretty big correction last year. Like, we've got some pretty big percentage corrections already in the last 5 years. It's not like a crash is going to happen nonstop, right? But obviously it's still a risk. I just think, I guess my bias tends to be obviously on the upside, because I think that's the biggest edge you ever have in the market, which is on the upside. And that if you're patient enough and you pick the right stocks and the right investments, even if you're wrong short term, you can still be right long term. And I think that's a very powerful edge, to where it doesn't matter as much if I'm right short term, because I can be right long term, and that's the most important, right? And I think a lot of people don't have that type of patience, and I think you have to have that type of patience with markets. So it's interesting where you get so many people that just want to bet the market's going to always crash or correct, and you see it a lot running this YouTube channel. But hey, Q is back over the VWAP 200 EMA. Yeah, you're looking at pre-2003, just for argument's sake. We, the people, like, nobody's talking about 2003, brother. We're talking about before this AI bull run, dude. And again, the way you can tell PE was better than it was now a year ago was because their earnings power has 6x'd, right? So, I don't know. Their earnings power is 6x. The price of their stock is only 3.4x. That means their PE ratio is better now than it was back then. But again, we're not talking. Anybody can isolate the best PE time of any company and then use that to argue why it's worse now. What I'm talking about is a year and a half ago, Nvidia had a worse PE ratio than it does right now. 60 is the same PE ratio as, like, what, Netflix, Amazon. It's not like Apple. Apple's got a PE ratio of what, like 20? So Apple has a good PE ratio. Meta, I think, has a pretty good PE ratio as well. But I don't think we can look at PE. I think you have to look at the increase or decrease to it, right? And again, I think yeah, here we go. Here's the easiest way to put it, chat. All right. And this is exactly what I'm saying. Exactly what I'm saying. So people saying that Nvidia is in a bubble, right? Like, look, here's a literal PE ratio graph, and this is exactly what I said, right? Which is that their PE ratio is noticeably lower than it was a year ago. A year ago, Nvidia had a PE ratio of 144 in the same period exactly a year ago, right? Exactly a year ago. Today it has one of about 70, right? But again, you can see the decrease. It's decreased about 50% of its PE ratio since the same period last year. And again, it's about exactly what it was 2020, right around where it was 2020, 2021, 2022, 2023. And so people acting like we're in some massive bubble. Again, I don't know, man. Again, this is something that I just recently started looking at. So many people were telling me Nvidia was in a bubble. I started looking into what the earnings power was for them, how it's changed over the last 2 years, a year and a half, since people have been claiming we're in some massive bubble for it. And again, what I found was that its PE ratio has basically stayed the same. It hasn't really, in fact, again, it's down from what it was a year ago. And it's stayed the same over the last 4 years. You know what I mean? So, I mean, I don't think that's a big argument for a bubble. I think one thing that you see is, you know, the stock price has increased drastically, of course, but so has the earnings power of it, you know? And again, I don't know. Maybe it's a bad argument. I might be wrong. Maybe I'm missing something. That's true. I mean, I'm not being sarcastic when I say that. Maybe I am missing something here, but it doesn't look like I am, you know? Right. I mean, I think that it really is part of what it is, Blaze. You said don't hurt their feelings. They missed the move, and now they have to convince themselves it's a bubble. Right, for sure. I think if you missed out on the 24% in the S&P 500 last year, it might be a pleasant thought to think that it's all going to come back down, and everybody that made money, which isn't you, is going to lose it. But I don't know. You know, maybe. I think that's too emotional of a mentality. I think you gotta just, if you can't beat them, join them, right? If you missed out on the big moves, then, you know, DCA for the next big move. I think, you know, is the only way you should approach the market long term. Short term, do whatever you want, but. Yeah, but you're looking at 20-something years of, like you're looking, again, we the people, you're isolating a PE ratio from 23 years ago, brother. You know, the standard of PE ratios have changed drastically. Like back then, again, 10, 15 was a good PE ratio, right? Nowadays, if you got a 30 PE ratio, you're doing pretty well, right? You're doing pretty well. The standard of PE ratios have changed drastically in, you know, a quarter century. That's not what we're talking about at all. We're talking about Nvidia. Nvidia was a very new company back then, right? So they were very fresh. They were brand new. So of course they had a low PE ratio. They were brand new. They had to have a low PE ratio or they would have gone out of business. Again, what we're talking about specifically with this bubble argument is where Nvidia is now, like whether it's in a bubble now versus where it was a year or two ago. And again, PE ratio rise, which is, again, for those that don't understand what PE is price to earnings. They're about neutral. They're flat, you know. So again, not the biggest bubble argument. Yeah. 2003, I don't know, dude. Here, I'm going to add a little bit to Netflix. Yeah, we just bought a little bit of Netflix. We're just kind of buying a little piece. We might add more in a dip. Microsoft's down a lot, too. And it's all good. We can agree to disagree. It's all good. It happens, man. Again, to be fair, I only recently looked at this data, right? Like, I only recently looked at the PE ratio for the last 5 years on Nvidia because so many people were saying, oh, it's a bubble. It's a massive bubble. It's going to correct. And so I'm like, okay, well, let's look. Let's see, right? PE ratio, the first thing I'm looking at, like, is it extended? And it's not, right? It's the same as it was 4 years ago. You know what I mean? So, like, I don't know. If you would assume if Nvidia's in some massive bubble that the PE ratio would spike, right? The price to earnings ratio, like the price of Nvidia's shares would spike relative to how much it was making. And that just didn't happen, you know? So, like, really, if anything, they're earning 6 times what they were. All right, chat. $3 trillion worth of options expiring today. Wow, yeah. I mean, Nvidia up to 840s. We'll see if it actually holds. Netflix at 570s. News was insane. What happened last night, news-wise? Oh, yeah, stuff going on overseas. I don't know. The world's always been crazy, though. It really has. Like, we just haven't, like, yeah, the world's always been crazy in the macroeconomics-wise. Or not macroeconomics-wise. Well, yeah, I guess macroeconomics-wise, too. The world's always been kind of out there. I don't see anything different. It's just people take it. Yeah, I mean, again, you know, you hear people that are like, oh, the world's so crazy now and all this stuff, right? But the world was really crazy. Think about the early 1900s, dude. 2 world wars, like, you know, like a bunch of craziness happened. Crazy dictator, you know, dictators, plural. Just kind of, you know, the early 1900s was crazy. The difference nowadays is that we just have 24/7 news coverage, pointing cameras at it all and showing us on the regular. And so, you know, again, people that don't understand history might think it's craziest now. It's not, you know. It was much crazier back then. In fact, it's a pretty peaceful time right now, all things considered. Now, I'm not saying it's good. You know, I say that, people are like, peace, you know, but, like, it's relative to what it was back then, yes. Yeah, RTX earnings, Lockheed Martin earnings tomorrow also. Are Amex earnings out? Yes, they are. So Amex dropped earnings. Sorry, I'm a little late on this. Kind of looking at some other news here. But yeah, Amex numbers are out. They posted 333 EPS. They expected 295. Revenue of 15.8 bill. They expected 15.79 billion. Here's the Amex earnings right here. Just recently started following WWE again. I used to watch it a lot as a kid. You know, and I was into it, man. Like 5th grade, right? 5th grade was like Stone Cold Steve Austin time, where like Mankind, Stone Cold Steve Austin, like Sting. I remember Sting, and I was really into it in 5th grade, you know. But it didn't last long. Like I even went to some live event, you know. I even went to some live event, which was fun, like a tour and live event. I had bad seats, but it was still cool. And then I just kind of, once I hit 6th grade and started getting into girls and stuff, that just kind of faded away, I think. You know, I just stopped being interested in it. You know, never really got the itch to watch it again. Yeah, I mean, honestly, I kind of transitioned to liking like real fighting. You know, like I'm a big MMA fan. I've been watching MMA for 10 years. I trained jiu-jitsu, like BJJ, and some Muay Thai and stuff like that. Like I trained a little bit, and you know, I kind of just transitioned. I think I grew up in the 90s, and so I grew up. When I grew up, everybody that grew up in the 90s knows, like the late 80s, early 90s, there was like a martial arts boom. You know, there's like a martial arts boom. Like the Karate Kid came out in the 80s. Everybody freaking loved it. I loved it. Loved the Karate Kid. The movie Sidekick with Chuck Norris came out. Like there's a bunch of karate movies. Karate had like a big surge in popularity in the 80s and 90s. Bloodsport, like all that stuff dropped. Created this big karate boom, I would say. And I think that kind of sparked my interest. My cousin did it too. I remember my cousin. I used to go to karate tournaments with my cousin back when he was a kid. Yeah, man. I mean, enjoy it if you like it, Pawn. I'm not judging you, bro. You know, it's cool. Like, if it gives you something to do. As you get older, like, look, as you get older, you gotta find interest. It's just kind of how it goes, you know. I have ADHD, so I'm into a lot of different things, you know. Three Ninjas, bro. Oh, the greatest ever martial arts movie of all time. Honestly, I really wanted to rewatch it. I can't get my family to rewatch it with me. It's been literally 20-something years since I've seen Three Ninjas. Used to love it. Like, love Three Ninjas movies, man. You know, it's really kind of funny, man. My son will watch movies over and over and over and over again. The same movies. He'll watch them over and over and over and over again. Right? And I'll ask him, I'll be like, Jack, you don't get bored watching the same movies over and over and over again? Like, you don't find that boring? And he's like, no, I like the movies. I'm like, okay. And it's ironic because I tell him that. But I remember when I was young, I used to do the exact same thing. I used to just watch the same movie over. Happy Gilmore. I used to watch Happy Gilmore over and over and over again. Three Ninjas over and over and over again. You know, I remember I used to have, man, what was it, dude? I had the... I think I had Street Fighter, the movie, with Jean-Claude in it. Let me see. I think it was Street Fighter. Yeah, I had Street Fighter, the movie, with Jean-Claude in it. Used to watch this movie too, man. I think this is really like identified as one of the worst movies ever made. Earnings next week. Yeah, earnings next week are huge. We got a lot. We got Amazon. Or next week, yeah, next week we've got Google, Microsoft, Meta, Tesla, Boeing, AT&T, Verizon. A lot of the big earnings are next week. I couldn't and still can't do that. Yeah. Again, I can't do it nowadays, right? Like, nowadays I've changed, and I've tried to get my son to change. Like, there was some point maybe I just got older, but at some point I changed, and I can't watch the same movies anymore. You know, Carol can, though. Carol will watch the same movies over and over and over again. Now. But I only did that when I was young. There was a point, I guess, when I got older where I stopped doing that. Netflix not reporting subscribers anymore is a sign. I don't think I think there's a lot of competition for Netflix now, but I do think they're okay. Yeah, Tyler, I think it's really how it goes. You know, again, ADHD is a blessing and a curse. It really is. Dude, we bought the dip in Netflix and we're up like $40 already. I gotta take half of this off at least now. Might as well. All right, let's see. Yeah, I mean, we're gonna take it off. Like, we already locked in a lot of profit buying this dip. We'll hold on to the rest, I guess. Could have been worse. Dude, I remember reading some Teenage Mutant Ninja Turtle comics, and they were dark, dude. I remember my mom used to just randomly buy whatever. She didn't even check it. She would just kind of buy it. Right, she would buy me whatever. You know, I remember she bought me Snoop Dogg CD in 2000 when I was like 12. You know, she bought me R. Kelly CD. R. Kelly had some good music, even though, in hindsight. Anyways, but yeah. I remember she bought me this Teenage Mutant Ninja Turtle comic, and in hindsight, it was super violent. Like, it was not what I should have been reading as a 12-year-old. You know, but again, this goes back to and I've said this belief a few times. I truly believe you need to expose your kids to the world, man. Because, again, like, I'm not a violent person at all. Like, I'm not a violent person at all. Like, I've never hit Carol ever. Like, I've never done anything like that. I'm just not. And I really think that it's like that because, you know, I think if you shelter your children from certain things, right? I think you should shelter your kids from certain things, but I think if you shelter them too much around certain things, they become obsessed with it when they get older, and when they finally become an adult, they become obsessed with it, and it becomes like an obsession in their life, right? So if you don't let your kids ever see any, you know, real life stuff, like violence happens, right? If you don't let your kids see any of it to the point where they turn 18 and they've been sheltered from it so much, they're going to get obsessed with some of that stuff, right, when they get older. And so I think you got to expose your kids to the world, man. I think you got to let them see what the world is, and you can't hide it from them too much, you know, because if you do, it kind of, you know, at least that's my own personal opinion, but. Yeah, I believe I went and saw Space Jam in theaters when it came out. Yeah, the original Turtle comics. Yeah. If it seems fair value, I'll buy it. I stay far away. Yeah, I'm in Netflix right now. I made my money. I don't know what to do with it now, though. Like, I took most of it off. It was gonna be a little bit longer term too, but we bounced back so much. I bought like 5 shares of Netflix, and we made $30 in like 5-10 minutes. So I mean, It's hard to argue that. Yeah, I mean, I'm not getting that conversation, Tyler. I will avoid that conversation. But how much coffee do you drink per day? Benzinga asks. I drink 1 cup of coffee per day, and that's it. I don't drink more than 1 cup ever. If it's later in the day, I'll drink like soda, and I'll get some caffeine in that way. But I won't drink coffee twice a day. You know, my parents drink like 5 cups a day sometimes, and like I just can't. Again, that's too much, man. It's too much. At the same time, though, I do crash at midday. I do crash. So like noon, 1 o'clock hits, I usually need to close my eyes for a little bit. But I get up at 4:30, so that, you know. Yeah, I don't drink actual soda like Coca-Cola. Like, I won't drink Coca-Cola, but I will drink like stevia cola. Like, I have stevia cola that somebody's asked me. They're like, "Hey, what are you drinking?" It's stevia cola. You know. All right, so we are getting a bounce back in tech stocks. So Nvidia up to 840s, Netflix up to 580s, Q up to 422. So we are getting a bounce back in tech stocks. Again, most tech stocks are down from Nvidia mostly. It's Friday. We ain't got no job, and all we have to do is stand here and talk about stocks, chat. I don't know. Again, please and thank you. Let's not make it too political. Like, I see some people that just kind of sit around and argue about politics. Again, y'all gotta find something else to talk about, you know. Again, and I'm not against you or for you. I'm neutral. I don't want to argue about politics all day. Like, that doesn't seem like a fun existence, and I think media gets people wrapped up in it too much. I would rather just kind of, you know, avoid those conversations. And as well, it's like, again, I'm not for you, I'm not against you. I just rather not political arguments fill up my chat. Please and thank you. This 3-year tracker of Warren Buffett versus Cathie Wood, man. Again, I always said it. I'll say it once. I'll say it again. I don't know if I like Cathie Wood stocks. Let me mute the music here. I don't know if I like Cathie Wood stocks. Like, look at this. This is Warren Buffett versus Cathie Wood. Like, the problem I have with Cathie Wood's trading strategy is this, okay? Typically, smart people are going to invest in companies that are healthy companies, right? But not hyped up mid caps, right? Like, for lack of a better word, a lot of the companies that ARK invests in are mid caps, right? They're simply not blue chips. They're fresh companies that recently IPO'd. It's so hard to gauge whether a company like that is going to be successful market-wise that I think it's just incredibly risky to invest in mid caps. I say this once, I'll say it again. Most traders, a lot of traders, not most, a lot of traders lose. Like, they would be profitable investors, except for they invest in some mid-cap companies that have huge drawdowns. Mid-cap stocks can drop 70% a year. Like, they're incredibly risky, incredibly risky. If you're going to invest in established legacy blue chip companies. Do not invest in brand new companies. Don't invest large sums. Like, you can diversify. I invest, like I'm in right now, just as an example. I am in SoFi, I'm in SoundHound. I'm in Unity, you know what I mean? Like, I'm in some of these kind of like fresher names, but I'm not in big enough to where it's going to cause risk to my portfolio if I'm wrong, right? I'm in Snapchat. These are small positions. I'm not going to take crazy large size with these companies. I'm just not. They're not established enough. You know, the companies I take larger size with are companies that have been around for, 50 years, that have been around. They've been making money. And I think those are the ones, and I think Cathie Wood, her problem is that she invests in those companies that are fresh, that are brand new, overhyped, super hyped up. And I think that's the problem. What do you guys think? Yeah, and I think you have to be pessimistic in stocks. You have to be incredibly skeptical, I really think it's something that you have to be. Yeah, so Mr. Scruff, I'm going to preface this with I am not an investment professional. I am not liable if you lose. Remember, I have no idea what I'm talking about. I might be wildly wrong about everything I say. Do not copy me. I'm not an investment professional. Again, I have no idea what's going to happen, chat. I have genuinely no idea what's going to happen. So do not copy me. All right. With that said, though, it depends. If you're in at 110s, I mean, I still think that's a pretty good average. It just depends on how long you're willing to hold it. I think long term, if Tesla is at it stays in front of FSD and robo-taxis, I think they can do great things over long periods of time. Short term, though, there's risks, and if they can't stay on the front of FSD and robo-taxis, then there's problems, right? But outside of that, I don't know whether you should hold it or not. Yeah, John, they seem to float around the internet looking for a place to scream. Yeah, man, I mean, I'll say it once, I'll say it again. I think the more radical you get on either political side, the less intelligent you probably are, But again, maybe I'm just being judgy. I don't freaking know, man. I don't make my personal identity have anything to do with politics. And I think the media, if you don't have much to do and you sit around watching media all day, you can get really wrapped up in it, and I'm just not trying to. I got better stuff to do than that. Wait, who is the other guy? So it's fine if you don't know who Cathie Wood is, but you don't know who Warren Buffett is, mate. You don't know who Warren Buffett is, bro? He's the most famous investor of all time, dude. It's Warren Buffett. Berkshire Hathaway, Warren Buffett, You ever seen The Big Short? You ever seen the movie The Big Short? And Michael, no, not Michael Burry, and Steve Carell's character is interviewing the mortgage brokers, right? He's interviewing the mortgage brokers, and they're just kind of bragging about how much money they make, right? They're just bragging about how much money they make, and like the guy makes a joke. He's like, yeah, I think he says something like, I don't drive a 7 Series without strippers or something like that, right? And then I think the other guy, it's something like that. The other guy responded to one of his quotes. I'm not sure if it's that one, but the other guy responded and he's like, "Yeah, I think I heard Warren Buffett say that on the news." And the guy goes, "Who's Warren Buffett?" Right? And that's kind of the big joke. Warren Buffett's the most famous investor in the world. Yeah, Warren owns a chain of buffets across the country, you know. They're mostly pizza buffets, kind of like CC's Pizza, you know. I thought they should change the name to Warren's Pizza personally, but, you know, their cinnamon rolls are really, really good. So, shout out to Warren's Buffet cinnamon rolls because they're just really, really good. Really, that might be a good name for a restaurant, Warren's Buffet. Coming soon, guys. That's all I was looking for, your thoughts. Yeah, all good, Mr. Scruff. Again, I don't know what you should do. I like Tesla long term. I think short term. John, what's your comparison of how bears lose long term, as you mentioned earlier, versus Cathie Wood's optimistic view on mid caps? Well, I think what I'm always talking about, right? I'm never talking about mid caps. I could care less about mid cap companies for the most part. Energy, I could care less about mid caps. When I say bears lose long term, I'm talking about bears who short blue chip index funds. You know, the Nasdaq, the S&P, the Dow, blue chip stocks like Apple, Amazon, Google, Walmart. You know, Home Depot. I'm talking about people that short those companies long term. Biggest sucker bets you could ever get involved with, right? Like, again, those are the worst investments. Like, betting against the strongest companies in the world is never a good idea. And so, I don't know. I think it's silly to bet against those companies. But when I'm referencing bears losing long term, I mean, like, specifically bears of index funds and blue chip companies. I'm never talking about mid caps. Mid caps are kind of like penny stocks. They're only slightly better than penny stocks. They can be incredibly volatile, but they're high risk, high reward. And I think that's what brings people to them. Like, you can invest in a mid cap and it can go 5x or it can drop 90%. You know what I mean? And so I think new traders that think they can't afford blue chip companies, right? Like, new traders that think they can't afford, you know, Amazon or Microsoft or whatever, they end up buying mid caps and investing into them like they're blue chips, kind of like what Cathie Wood does, to be honest, right? They end up buying mid caps and investing in them like they're blue chip companies. And then when they're down 60, 70, 80% in a year, they don't know what happened. They're like, "Oh, I don't know what happened. The market's rigged," or whatever. It's like, no, the market's not rigged. You're buying the wrong companies. Like, when we're talking about investing, the biggest edge is buying. You know, again, my portfolio currently consists of, and again, there are some mid caps here, right? And this portfolio is very green, very green. We've already taken most of the profit off, but we are in Apple, Alibaba, Citigroup, Chewy, Delta, Etsy, Ford, Gold, Google. We have some GameStop, but forgive me for that one. Home Depot, Honeywell, Intel, Coca-Cola, MGM, Microsoft, Netflix, Nike, Oracle, Pfizer, Palantir, PayPal, Snapchat, Snow, SoFi, SoundHound, Tesla, Tyson Foods, Unity, Walgreens, Walmart, and ExxonMobil is my current portfolio, right? So again, these are mostly blue chips with a couple no penny stocks, with a couple mid-cap stocks to kind of add some diversity to the portfolio. That's what my portfolio is. Not telling you to buy any of these companies, but my point remains, do not treat mid-caps like, and again, the way you can tell, when I say mid-cap, I'm talking about newly established companies that are not penny stocks, right? So we're talking about companies that are fresh, that are new, potentially overhyped. A lot of mid-caps are really overhyped. And there's no history to back test. There's no history to really judge. And so people end up getting really, really heavy in them and they drop 90% in a year and they don't know what happened. Again, stick to legacy, well-known companies that you know and understand. Those are the companies to invest in. You know, even if you buy one share of Microsoft, right? One share of Microsoft, you can make hundreds of dollars from one share, right? So you do not need some crazy big portfolio to buy blue chip companies. You just need to buy small share size and be okay with that. You're not supposed to buy thousands of shares with a small account. You're not supposed to buy hundreds of shares of Microsoft with a small account. You're just not supposed to. And you gotta scale. It's levels to it. You gotta scale. You can't rush it. The earlier you rush it, the bigger at risk your account is. I would say that's probably a penny stock that got pumped and dumped, hidden. It sounds like I've seen it. I know what it is. It's kind of a penny stock that got pumped and dumped. And again, Kathy Wood is much more wealthy, much more successful than I am. And so again, take what I say with a grain of salt. She obviously knows something that I don't. And she is very successful, very wealthy. I respect her a lot. Like, I'm not judging Kathy Wood. I just disagree with some of her investments, to be honest. Like, I just simply disagree with some of her investments. So, yeah.
Just over.
Yeah, sorry, I'm looking at somebody else's stuff. Isn't it rumored that Buffett got started with penny stocks? I mean, honestly, dude, you hear so many different people, bro, that say the same argument, right? You hear it all the time. Like, they're just desperate to justify their own investments. Like, listen, man, like, most people know penny stocks are crap, right? Most people know that penny stocks are not good investments. They're just not. You can look at the Wolf of Wall Street, Jordan Belfort. You can look at all these different examples. Penny stocks are crap. Do not invest in them. They're terrible companies. Most successful companies, again, I said this yesterday because somebody said most companies start off as penny stocks. That is simply not true. That's just not true at all. And most successful companies don't, at least. Right? So most successful companies are never penny stocks. They IPO, they're already $10, $20, $30 a share. They're never pennies. Right? You look at Reddit. Reddit's a good example. Reddit, not even a big, like a really hyped up IPO. But again, Reddit IPOs, what's it immediately at? It's immediate like 30, 40, 50, 60 bucks a share, right? It's never penny stock. You know, that's what most successful companies do. You know, the only way people can argue that is if they zoom all the way back down to the 70s, right? And penny stocks in the 70s, like a stock that's $2 or $3 or $4 when you take inflation into account, is not a penny stock in the 70s. It's a mid-cap stock, right? And so almost no companies start off as $1 or $2 penny stocks and then end up being successful, right? That's just an argument to try to talk you into investing in crap. I don't even think they're good for short-term day trading. I think they're highly manipulated and influenced. Big money can throw shares around and pump and dump penny stocks and talk a bunch of naive investors or traders into sitting on it and doing it. But hey. Yeah, but I mean, Poet, you know, the Fed is intentionally keeping interest rates high because of inflation, right? So, like, if, again, like, people can complain that interest rates are high, but prior to that, people complained about inflation. Prior to that, people complained about a recession, right? So 2020, people complained about a recession. The Fed stepped in, they brought interest rates down to zero, they did QE, they injected liquidity, they expanded their balance sheet, they brought interest rates down, and again, once interest rates are down, people started spending much more and inflation spiked, right? And so then when inflation spiked, people complained about that. They said, oh, inflation's up, groceries and gas is too high, you know? And so then the Fed stepped in and they did what's called QT. They reduced their balance sheet. They reduced their balance sheet, they raised the federal funds rate, they raised short-term interest rates, and they brought interest rates back up. Why? Because everybody was complaining about inflation. And so now everybody's complaining about interest rates again, you know? So it's like no matter what, people are going to complain. You know, I would rather the Fed keep interest rates high. You know, I don't care about interest rates going down. The only people that really do are people in like real estate, mortgages. Those are the only people that are really emotional about interest rates being high. I don't mind keeping interest rates high. With consumers are too, to be fair. But I don't mind keeping interest rates high because, again, I think we need to curb inflation and make sure it's fully under control. I don't think the economy is at risk. We're nowhere near a recession or depression right now. Spending is high. Unemployment is low. And so I don't think we're anywhere near a recession or depression right now. And I think because of that, we can justify keeping interest rates higher for longer. You know, I don't think we should cut rates anytime soon. I'm not sure. I think there's not really. We got Austin Goolsby speaking at 10:30, but that's basically it. Next week's much busier. Next week, Monday, we got some stuff. Tuesday, flash services, new home sales, durable goods. Wednesday, GDP Thursday, jobless claims Thursday, PCE inflation data Friday, as well as Tesla, Meta, Microsoft, Google earnings all next week. So it's a big week. No, that's not true at all, Energy. Again, that's not true at all. Most legacy companies immediately IPO and go into mid-cap territory. Because, again, the most successful companies, before they IPO, people know what they are already, right? The only companies that are penny stocks, brother, are obscure, terrible companies overall, for the most part. It's never 100% like always. But most of these penny stock companies are just total crap that are never going to succeed, that are just getting manipulated by insiders and CEOs of the companies, and they're just kind of pumping them up and dumping them on shareholders, right? Most successful companies are well known before they IPO because one of the standards to IPO and go public is success. You have to be successful before you IPO if you want to have a good shot of being successful after you IPO. And so the companies that IPO are already successful companies, and penny stocks are just simply not that, dude. Penny stocks are, again, most of them are scams, brother. If you invest money into them, you will almost certainly lose. And this is a really hard thing because there's so much nonsense pumped out there that new traders with small accounts just they want to believe that they can invest in penny stocks and make all this money. I'm here to tell you, yeah, you're almost certainly not going to make a bunch of money investing in penny stocks. You know, in fact, it's the complete opposite. You'll probably lose a bunch of money. Invest in well-known companies that you know and understand, right? That are already established, not penny stocks. It's the best advice I can give you. Again, not an investment professional. Don't copy me. I have no idea what I'm talking about. I mean, I've been trading for almost 10 years, but again, and this is my own experience. Maybe I'm wrong, guys. I don't freaking know. But hey. All right. Nvidia, chat. Nvidia up to 850s almost. Is there a website you get to track the Fed speakers in real time? No. I mean, the Fed website is really what it is. All right, chat. We're sitting tight here waiting. Yeah, all good, man. All right, we're sitting tight. Nvidia back under the previous close, technically red. So JP Morgan CEO Jamie Dimon says Bitcoin is a fraud and a Ponzi scheme, according to Jamie Dimon. JP Morgan is an authorized participant for BLK's spot ETF as well. You know, they got this YouTube video of this guy in crutches trying to put on his shoes, and everybody just kind of walking by him and ignoring him. And they're acting like people are just so inconsiderate. The truth is that most of these people see the camera sitting there and they don't want to be thrown on the internet. I use the volume weighted average price at 200 EMA, although I can't guarantee you're going to make money. Nobody can. Yeah, maybe. Yeah, well, KURL is probably a very crappy company, Jay. No offense. Nobody invested in it. It's almost certainly a terrible company. Yeah, it looks horrible. No offense, dude. The trend looks bad. It's gone from $5 in 2018 all the way down to 40 cents in 2024. So, long-term terrible downward trend. Oil spiked up yesterday, and then it faded all the way back down today, Daniel. You know, macroeconomic uncertainty causes oil to spike usually, but it's kind of coming back down already. Exit out of some of these clips. Trade the moon phase. Yeah. Yeah, I mean, no offense, Jay. It's almost certainly going to fail as a company, brother. You know, I don't know how many penny stocks I get people telling me about here. Almost all of them fail, dude. Sorry, brother. It's just the truth, unfortunately. All right, chat. All right, chat. So we hit this. Let's sign. Oh no. Oops. Signed it for my new 100,000 funded account. All right, signed. You love to see it. I guess I'll just use this. I thought I had a. Didn't I bring my wallet here? I did. Okay, cool. Okay, there we go. All right, so we're getting our 100K funded account. Look at Nvidia back up to 848s. Netflix is down there, but we already took some profit on it. All right, so that's nice. What else we got today, chat? QCOM is a penny stock. I think it's really funny. Okay, so listen. I'm sure, like, you could dig around and find outliers to my argument about penny stocks. Like, you can always find outliers, right? But that doesn't mean it's a valid argument. You know what I mean? Like, being able to find one stock that was once a penny stock and is now a blue chip company doesn't mean that penny stocks are justifiable investments. Like, if 1 out of 100 works, do you have an edge? Of course not, right? It's one of the silliest arguments, and it's really coming, like, you know, what's crazy is that, like, it really is something like this, where you get people that literally invest in penny stocks are down thousands and thousands of dollars, right? Investors in penny stocks are down thousands and thousands of dollars, but misery loves company, so they sit here and they argue about whether they argue that penny stocks are good investments. It's like, dude, if you're down thousands of dollars, they're obviously not, and they'll have some excuse. They'll be like, I would have made money. If the stock would only have gone up, I would have made money. You know, it's just kind of like, get out of here, man. Of course, you can find a couple companies that started off as pennies and are now wildly successful. It doesn't mean it's a good argument. Hey, later, Isaac. Gold. Gold had a big run up over the last day. Now it's back down. Tesla IPO'd June 29th, 2010 at $17 a share, sir. So, again, I'm going to say it again. Tesla IPO'd at $17 a share in 2010. Okay, the only reason it shows $1 there is because of splits since then. They've split multiple times since then. Again, it started off June 29th, 2010 at $17 a share on IPO day. So, yep. Which again proves my point. Most successful healthy companies never are penny stocks. You know? Like, if you have a hard time finding one stock that started off as a penny stock and is now successful, that proves my argument. You know? Again, I'm not doing this to argue. I'm doing this because like, penny stocks hurt traders, man. And again, sometimes it's one of those things where, you know, you'll have a trader that's just really, really stubborn, and they'll trade some type of like obscure moving average strategy, and it just doesn't work, right? But they keep on trading it. Their logic in their head is like, hey, I've spent so much time learning this strategy. I got to keep trading it. Smart people identify when there's no edge and move on, right? Stubborn people continue to push, lose, don't understand why. They blame it on, you know, all these different people or whomever, and they just continue to lose, right? It's really, really important that you stay objective and you say, hey, is there an edge here? If there's not, move on, right? And I think most people that actually invest in penny stocks know this. They know it's not really profitable. They know, like, a lot of them are really, like, realistically just down so much in certain penny stocks that it hurts to look at objectively. Like, if I've spent 30 grand in a terrible penny stock company and it's down 90%, you know, I might just kind of sit there and hold on to hope that it maybe one day will come back up. And so it might hurt to hear, but I really, like, lick your wounds, move on, you know, figure out a different edge, because that ain't it. It's just not it. Tesla back up to almost 148s. Glad you debate people. That is your strong point. Yeah, I'm pretty good at, you know, arguing, I guess. I think if I do have a skill, top 3 skills in the world right now, I think if I do have a skill, it's I can express what I'm trying to say very easily. And I don't think that comes, like, I don't think that's everybody. I think there's a lot of people that struggle with that. But at least that's what my wife tells me. Maybe she's just making me feel better, you know. Maybe she's just being nice. But yeah, no, I'm just kind of trolling. Just thought about shorting Nvidia on highs. I don't know, man. I think it's a risky endeavor. Yeah. I was gonna make that joke, Mac, but I stopped myself, bro. It's all good. Yeah, I can get along with people. Again, it's like sometimes people get really in their head about it, though. Like, I can debate with people, and you know, And as long as they're respectful with me, then it's all good. You know, I think there's a lot of people that can't. I think a lot of people debate back and forth with me, and then they get in their head about it. They get in their head and they start just turning into haters, where they're just kind of trying to disagree. They're trying to instigate. They're trying to cause problems. And again, they just get, like, that's just a really emotional way to be. I think you got to just understand, look, you and I, guys, might disagree on things, and that's all right. Maybe I'm wrong. I could be wrong, certainly. And again, as long as you give me your argument respectfully, and as long as it's not, like, unreasonable, like, as long as you're not sitting around waiting to disagree with everything I say, regardless of whether you truly believe it or not, just to stir the pot, like, you're not going to get banned or anything here. What's your bias for the market today? I don't know. I guess I have a bullish bias, although it's Friday, so I guess I could see us chopping today as well, like kind of a flat market. I think the market's down, you know, over the past few days. It's not down a ton. It's down like 1 or 2%. And so I guess my bias would be on the upside, because of just a lot of the time you drop a couple days, you bounce back up, you know, you drop, bounce back up. But again, with no economic reports today, with it being Friday, and with next week being a big earnings and economic data week, I think we could have choppiness today. So upward / choppy expectations today. I agree, 99% of penny stocks are complete trash. Right, but yours, right, Jay? Yours is the one that's somehow the right one. Do I got that right? You know? No, it's all good, man. Invest in what you want, bro. It's all good. I hear it a lot. I had a guy that just shamed me for CEI, right? CEI, this was a long time ago. CEI, he told me that CEI was a terrible company, penny stock. Eventually, I think it got delisted and went out of business, right? Which is what I thought would happen. I was talking trash about CEI, as I should have been, because CEI was total crap. And a guy just told me I didn't know what I was talking about, that he was going to come back to my stream and, you know, he was going to come back to my stream next month whenever CEI had doubled in price. And then by the time the next month happened, CEI was down like 75% from where it was when he said it, and we just never saw him again, right? So again, everybody thinks that their penny stock is different. I'm here to tell you it's probably not. Choppiness like yesterday, maybe. Yeah, top 3 choppiest days in the world right now. No, that was Max. Cal. That was Max. Max said he would buy me a Beamer. He liked CEI too. You never. Again, what happens is like people push these penny stocks to everybody, and again, a lot of them are just kind of going from room to room to room to room, shilling these penny stocks, right? Eventually, their penny stocks do what almost all of them do, which is they fail, they crash, they don't do anything. And usually they end up just kind of going silent, and you know, you hear crickets and you never see them again. They probably create another fake name and push some other sketchy stock or whatever it is, and that's kind of the circle of life in YouTube comments. Well, I'm here to tell you you're wrong about penny stocks. I'm here to tell you you're wrong about your use of the word your. Your is possessive. You want to use a contraction for you are, you know. And yes, I did just attack your grammar, sir. But again, hey, listen, I'm just trolling you a little bit. If I'm wrong about penny stocks, explain where I'm wrong, and we can talk about it, you know. Tesla back up to 147.50s. I don't know how many times I hear people say I'm wrong, and then I never hear any argument. They're like, you're wrong. I'm like, okay, how? Silence. All right. I'm listening, you know. Nvidia at 847s. So let's see if it holds the previous closing price. It's right at that previous closing price level. I know I'm not wrong, man. Most of the time, the people that are claiming I'm wrong are just emotional because they've lost a bunch of money investing in penny stocks. Realistically, that's probably what it is. Yeah, just trust me, bro. I know, man. Listen. Yeah, for sure, pawn, you know. All right, guys, Tesla at 147.50s. Netflix down at 570s. We bought Netflix. We took profit on the bounce. Now it's kind of sitting there. We're still green on it, though, so that's nice. We'll see if it bounces more. Again, I might add back to it, too. Why rest in peace to CEI? Because CEI is no... Is CEI still around? Let me see. I didn't even look. It is still around. It's 17 cents a share now. Look at this chart. Y'all want to see CEI, the company I'm talking about? Look at this. Look at this chart. This has got to be the worst looking stock chart I've ever seen in my life, right? But you would be surprised how many people... Look at how many times it's been split. Look at this freaking number. Look at how many times it's been split. Look at this number, man. I don't even know what this number is. Let me see how many digits. 3, 6, 9, 12 digits. Okay. 12 digits. Okay, so this would be 100, or so this would be, just to put this into perspective, guys, all right, this is a post-split high for CPI of 146,484,375,000. Actually, no, it would be, I'm sorry, it would be 14,648,437,500 would be a post-split high of CEI. The reason I'm bringing up this number is because that means that the company had split. Who knows how much the company had split? Basically, they were so weak that they had to split they had to do reverse splits on their stock so much to where the highs now are in the billions of dollars. That's a very weak sign for a company. Yeah, that's rough. Yeah, it extended bull flag, bro. Yeah. Where's the guy who said I was wrong? Did he just not say anything? You're wrong, but I'm not going to tell you why because I can't. So I'm just going to say you're wrong and then leave. Where'd he go? Yep. All right. 730 actual high. Yeah. Yeah. So Apple spiked up a little bit, slightly green. Q is slowly fighting its way back to a green day. Slowly. Maybe he went bankrupt that fast. Yeah, they're running from getting NASDAQ minimum. They have to maintain above the minimum NASDAQ bid requirements. And so that's why they're artificially pumping the price of their stock up with reverse split so that they can stay above that price, right? It's a very weak sign. But again, people that don't understand, which again, I would argue most people investing in penny stocks are new, kind of naive traders. Like, they want to be investors, right? Like, most of the time they want to be investors. They hear investors are successful. This is my guess at like the path that they take to somehow get talked into investing in penny stocks, right? Is that they want to be investors, right? They hear investors are successful. They hear about all this money floating around and investing. Maybe they get talked into it on social media and they're like, hey, I'm going to become an investor, right? So they save up their money. They get a couple $1,000s probably, or maybe a couple hundred or whatever, budget they have. And they take that money and they look at how many shares they would get of Netflix, which is like 1 or 2, right? They look at how many shares of Microsoft they get, which is like 2 or 3, right? And they say, oh, I can't buy 2 shares of Microsoft. That's nothing, right? So instead, they start researching penny stocks, and the marketing behind these penny stocks is really, really crazy. Like, it's like sensationalist. Like, hey, this is the next Amazon. Look at all these government contracts, when really they might be government contracts. They might just been one deal that they got with them, like, that they're just kind of regurgitating to try to sell the stock. Anyways, they get wrapped up in it. They end up, and so 500 shares of a terrible company might sound a lot better than one stock or one share of Apple or whatever, Amazon, Microsoft, a couple shares. And so they end up just spending all their money on just total crap. Maybe you got some other influencer that's pushing this crap too, that's pushing these penny stocks. If you look at some of the videos that people make about penny stocks, super sensationalist. Like, yo, this penny stock is going to 5x this week if you just look at the catalyst, do your DD. Like, DD in penny stocks doesn't exist. It's just marketing, right? Like, it's not actual DD. It's simply marketing. You can't really tell how good the company is behind this marketing or the DD behind it. They just trying to talk you into buying it. The same thing Wolf of Wall Street did. Yeah, it is kind of like buying a lottery ticket. All right, anyways, let me stop ranting about penny stocks. Apple now technically green. The Q is fighting its way back up. We're hitting the previous high right here. So again, we'll see what the Q does. Looks like a flag, but not a super steep one. So and again, if I just told your story about how you got talked into investing in penny stocks, don't get mad at the messenger here. I'm here to help. I'm genuinely trying to help. But be strong enough and resilient enough to nonsense to be able to stop, recognize that what I'm saying is probably true, and start investing in good companies. Like, that's the biggest edge you could ever have in markets. It's easy to make money when you invest in good companies. It really is. It's super easy. And you only really start to learn that when you start investing in good companies. You start tuning all the bears out, you start investing in good companies, and you start making money, and you realize how easy it is versus penny stocks to make money, right? But a lot of people have never experienced that, and so they don't really understand. And you're not always going to make money. It's going to take time and energy, and you're going to lose money. Sometimes bear markets are going to happen, but if you're patient and you hold, you're almost certain to make money in blue chips long term, right? Almost all the blue chips that we have now are going to break highs again sometime in the future. We don't know when, but I'd rather take that edge. Yeah, so Amex earnings are out. We covered them earlier. Procter & Gamble are out as well, I think. All right, so yeah, the Netflix password crackdown delivered millions of new customers to them, according to the Wall Street Journal. We did have PG earnings. They posted EPS 152, beat 141 estimate, sales of 20.19, missed estimate. So mixed results for PG. Good EPS, which is margins, and bad revenue. Kind of, Larry. Although I would say some meme coins have better edge than penny stocks, but they're similar. Yeah, I'm not sure about the halving tomorrow. I think it'll be fun to watch. All right, guys, Q pop it up a little bit. Q pop it up. We still got about an hour until the open. Yeah, Netflix is starting to come back up too. I mean, it started to bounce, but it's been chopping back and forth really since yesterday after the dip. So it dropped a lot from earnings, and now it's kind of flat. Yeah, slap that like button, chat. We appreciate it. Bro, so the you're not real person on the airplane is now a famous influencer. You know, the person that was on the airplane and was like, that guy is not real. Right? She's now a famous influencer. What a world we live in. You got the Catch Me Outside girl now famous. You got the You're Not Real girl not famous. Maybe I should have a public, you know. Never mind. I'm not going to put that out into the universe. But still. I don't think this person being famous is good for the world. Right? Because what does it encourage? It encourages more people to do crazy stuff to try to get famous. And I think that's bad. Well, I think it depends on whether you're creating, like, okay, so if, you know, I talk about this, sometimes I'm afraid to tell people what I do. Usually I just tell people I run a stock market marketing business, because that's what this is. It's a marketing business is what this is, right? I'm certainly afraid to say, hey, I'm an influencer, because again, I'm not really, like I'm not out there quizzing people on the streets. You know, I'm not out there pranking people. You know, really, I'm creating educational content online. You know, I'm live streaming. We're covering stock market news. We're kind of like Forbes, you know, like a much smaller version of Forbes. You know, we're kind of like Market Watch in that way. And I think that's different than like what people think of when they say influencers or content creators. You know, essentially, I think I provide more value. But Mahogany John, yeah, hey, the GOAT. What do you think about oil right now? I think overseas volatility is causing oil to be volatile, and I'm not really trying to mess with it like that. Yeah, dollar cost averaging is a powerful thing. I don't know who that is, V. Yeah, definitely top 3. You are a success, man. Yeah, we try. I try to just be honest with people, man. Like, you get some people that call me out, or like that try to like make me look bad or whatever. Again, I got like most people I grew up with are like genuinely happy for me, but you got some people that are just not doing much in their life, right? Like they're just kind of struggling. They're not doing that much. You know, maybe they talk smack about me back in the day. Now they kind of see me on the internet, and again, a lot of them found me without even, you know, they found me organically too, which is cool, kind of cool to say, you know. But again, some of them turn into haters because they're mad they're not really doing much, you know. It's like, look, anytime I promote anything, I tell people I'm biased. I haven't plugged anything at all today, and I've been streaming for hours now, right? So, like, I really don't plug that much stuff. And when I do plug, I tell people straight up I'm biased. You know, I tell people they're sponsors. Like, I got 2 sponsors, which I don't think is unreasonable. And we average maybe, what, like a plug every 45 minutes or so. You know, we usually keep the first few hours clean and easy. And the last few hours, we kind of, you know, plug a little bit more heavy, but, you know, I don't think it's unreasonable when you look at it. Yeah, I think that's true. People like you doing well. They just don't want you to do better than they are. When you start doing that, people get weird. I think a lot of people have these high expectations of themselves when they're young. And, I don't know. Like, I was kind of nerdy and introverted. You know what I mean? So, some people made fun of me when I was young, and you learn to get over it. You learn it's just, usually people doing that are, usually they got their own struggles going on. Like, you know. Yeah, definitely top 3. And I'm not even claiming to be like some super successful dude. I'm, you know. But I think it depends on if they went to college. Like a lot of them went to college and now they're not doing anything. They can't find a good job, and so they gotta kind of get weird. Looks like we may rip today. They like squeezing shorts. Yeah, I mean it's Friday. It's the day before big earnings next week, right? So next week has big earnings. Specifically, we have Tesla, Microsoft, Google, Snapchat. Bunch of big earnings next week. Boeing, AT&T, Verizon, like a lot of big earnings next week that will move markets. And so my thinking today is that we dropped a lot yesterday. Right? Didn't we drop? Let me make sure. I'm pretty sure we dropped. Some like all the days start to kind of, you know, blur together when you do this long enough. Yeah, so a red day yesterday. Netflix earnings dropped the market a little bit, and we've been dropping really since we've been dropping since like the 11th for the last week straight. And so I think heading into earnings, maybe we're going to get some bounce backs today. Maybe we're going to get choppy action. But as always, Chad, I really don't know for sure. I don't know for sure. Maybe we do. Maybe we don't. Yeah, well, I think the money's better, energy. You know, and I'm here to vet. Like, I make more money doing this than most of the people I know that got their master's degrees. You know, so I think it's money related. And again, I feel you, man. Like my son, I have a son and daughter. My daughter doesn't really want to do this, but my son wants to be a YouTuber, you know. And again, I'm okay with him like encouraging that dream if he wants, but my son's also really gifted at mathematics. And so I want him to pursue engineering if he can, electrical engineering maybe, or something. And again, I want him to do whatever he wants to do, but I just want him to take advantage of his skills. Yeah, Tesla's tricky. Very volatile. Very volatile, so I think Netflix is fine. I'm a bull on Netflix. I really am. Like, I like Netflix. I think Netflix is producing high quality content. I think the Jake Paul Tyson fight is coming out. I think Netflix has been creating their own in-house movies, and they've changed the standard of movies in general. I like Netflix long term. I think it's solid. Yeah, I mean, I said it before. I think the standard of college has changed. So what I mean by that is, like, everybody wants their kid to go to college now. And 50, 60 years ago, it wasn't like that. Like, 50, 60 years ago, only select people went to college. Another thing that's changed is that, back in the day, if you wanted to be an attorney, right? Like, if you wanted to be a lawyer, you would pass the bar, right? Which is not easy. You would just pass the bar, and then you could do an apprenticeship as an attorney and start practicing law within a few years, right? You didn't have to go to 8 years of freaking schooling. Like, what a ridiculous standard for anything. 8 years of schooling, like, so they're gatekeeping it, unfortunately. Back in the day, you used to be able to pass the bar and, be an apprenticeship. And I think there's a lot of arguments that show that the apprenticeship system is a better system than going to a freaking master's, or post-grad school. I think, or than a graduate school. I think doing an apprenticeship is probably better in a lot of jobs, in a lot of careers than than going to a going to a law school or going to a whatever. Doctors, maybe with the one exception, I think doctors should be highly trained, and so that's different. But attorneys, man, I don't think an attorney needs to go to school for 8 years. I think that's silly. Like, let him be an apprentice. If he passes the bar, let him be an apprentice, and you know, he could practice law in a couple of years. And I think you'd have a lot. I think you'd have a lot better, cheaper attorneys out there in the world, right? But instead, you got to go to college, spend hundreds of thousands of dollars. It's just ridiculous, man. The whole like big education is taken over, unfortunately, and it makes everything just super expensive. Yeah, the WWE deal is interesting for sure. I believe that's a big show. Would you support your kids if they wanted to be rock stars? As long as they're putting out good things in the world, yes. It depends on it depends on what they're putting out in the world, you know. Opening the green, not a good setup. You don't have any gaps to fill. Yeah. Washington State ended the bar. You are an attorney with or without one. Interesting. Yeah, I'm not talking about that. I'm talking about like seven years. Okay, so it's 7 years. So you have to go to 4-year undergraduate school and then 3 years of law school to become an attorney. To be a doctor, I know it's like 8 to 10. And to be a doctor, it's 4 years of undergraduate, 4 years of medical school. So 8 years, almost a decade, man. And again, maybe that's justifiable for doctors. Yeah, I don't know. It takes 8 years to become a veterinarian. I don't know, man. I think very little things you need 8 years to do. You know. Yeah, again, the Magnificent Seven earnings are going to be crazy in the next couple weeks. Yeah. Yeah, well, the medicine changes, George. That's just kind of how it goes, brother. You know. It evolves just like anything else. The Q almost green on the day, though. The Q's fighting its way back. Almost green. Apple up to 167s. Nvidia at 848.40s. So Nvidia's bouncing back, too. Again, let's see if it holds. Nvidia, I'm looking at like $900. It's been between 8 and 900 for a while now, so. Yeah, I was thinking about that, too, for vets. Because they have to do surgeries and act like conventional like doctors as well for animals, so I guess that's understandable. Right. Yeah. Do we have a bullish or bearish open? Did we do a poll today? I don't think we did, right? We might not have done one. I think I forgot to do one. Do we have a bullish or bearish open? Did we do a... No, we didn't do a poll. What's a good poll? Here, do we cut rates this year? Is a good poll. Do we cut rates this year? Q testing that previous closing price. It's right at 423.50s. So, vote on the poll. Let me know how you feel. If you can only trade one instrument for the rest of your life, what would you choose? Euro, Dow, gold, Bitcoin, Brent crude, NASDAQ 100, Japanese yen. Which one, guys? Which one would you trade? I'd probably choose the NASDAQ 100, really. Good volatility. That or maybe like the Dow. Gold can sometimes be slow. It's the only reason I wouldn't want to day trade. If we're talking about investing, it's different, but it'd still probably be NASDAQ 100, gold, Dow, you know. Yeah, Bitcoin, where is it now? You know, the halving tomorrow might... All right, Bitcoin back up to almost 66,000. Almost 66,000. The Q is at 400s plus, or about 420s right now. What is this? I got my... Yeah, about 423s for the Q. So it's fighting its way back out. Apple green, Nvidia green. The NASDAQ is right around the green level. Like the QQQ is the NASDAQ 100 ETFs, but it's right around green. What's up, brah? Tesla bounced to 184.50s. More than one scenario right now. Economic conditions seem good. Chad always breaks the intense beats. What do you think is going to happen to the bed? I don't know about Bitcoin. NASDAQ 100. How much do you feel the Fed needs to see the CPI drop by the first cut? I don't know, man. I think the Fed is... I don't know. I hope we wait. I hope we wait. But who knows, man? Like, again, who knows how long it'll take to convince the Fed to cut rates. Again, the big report I think is PCE data this week. So PCE data comes out next week. So PCE data comes out on Friday next week, right? That's a big report, relevant report. I think if that data comes in low, that's great, but we'll see if it does, right? I think it's a big if. You know. Also, guys, if you haven't already, again, check out one of my sponsors, Apex. Apex is a funded account program. You can actually day trade the SPY, the Q price action, and what's called the E-mini and the NASDAQ 100. You can't day trade the SPY and Q directly, but you can day trade the price action in futures, and there's no PDT rule. You can day trade short in futures. It's what most pro day traders actually do is day trade futures. They day trade futures. There's no PDT rule. Again, it allows you to... yeah, so here's my 100K account. Good. So we got funded at 100,000. So again, what they allow you to do, here's the NASDAQ 100 futures contract, right? It's the same price action as the Q, and I can day trade this in futures, no PDT rule. Most pro day traders trade futures because there's less restrictions. Like if you want to day trade stocks, if I want to day trade the QQQ, I think you need 25 grand in a margin account to do so without restriction, right? If you don't have 25 grand, you're only going to be able to day trade 3 times in a rolling 5-day period, basically 3 times a week. And to day trade and have an edge show up, you need a large sample size. Being able to day trade 3 times a week is nothing. Even with a cash account, you can only go long. You got to wait for settlement, all these restrictions. The futures market in that regard has much less red tape, but you can still get exposure to the QQQ, the SPY. Again, the NASDAQ 100 is the QQQ price action. It's the same thing. If you look at the Q and you look at the NASDAQ 100, it's going to look virtually identical. And again, so here's the QQQ on the bottom, and then here's the NASDAQ 100 on the left. I can day trade this in futures with a 90% split on Apex. Apex, they give you a demo. The base one's 25K. They give you a 25K demo. You got to make $1,500 in profit. The other one was 50K. You got to make $3,000 in profit. This is 100K. I had to make $6,000 in profit, and I did that yesterday on stream. But your risk is limited. The 25K one's only $30. The 50K one's only $35. The 100K one, I'm not sure how much I paid for it. I think it was like $45. And again, the best part is that your risk is limited. If you lose the base one, you're out $25-30. The top one, or this one, I was only out like $45 if I lose it, but I did pass it, right? And so, but if you pass it, again, once you're funded, you get a 90% split. So once you're funded, if you make 10K, you get to keep 9 of that. They get to keep 1,000 since they're funding you that money. And again, I think you also get to keep your first 25K in profit before any of that anyway. And so the risk is very limited. Most day traders lose their first couple accounts. And again, to be fair, I'm always honest. Most day traders are going to lose these too, because most day traders lose. It doesn't matter where they go. But that's kind of the point, is that it's a lot cheaper to lose this than to put up thousands yourself and lose that, right? Almost all day traders lose their first couple accounts. If you think you're going to be an outlier, I'm here to tell you you're probably not going to be. And so if you want to day trade, a funded account program will get you entered into the day trading market a lot cheaper. And you can test the waters. If you lose, it's not the end of the world. But again, if you pass it, you're still learning how to trade under pressure. You're still learning how to, trade. It's a perfect middle ground of trading. But if you pass it, you get a 90% split anyway, similar to putting the money up yourself. If you lose it, you're only out 30, 40, 50 bucks, whatever it is. Very limited risk. And so again, if you want to check them out, they're a sponsor. I'm biased, of course, because they pay me money. I'm biased because they pay me money. Of course, I'm going to be biased in their favor. I can't guarantee anything. You always want to check everything out with them. You can use my promo code if you want the max discount at all times. BT stands for beginner trading. BT is the promo code that you can use, the coupon code BT, beginner trading, 2 letters, BT, if you want to check it out. Remember, guys, I am not an investment professional. I'm not liable if you lose. Understand CFTC 4.41, which hypothetical or simulated performance results have limitations on like actual performance. They do not represent trading and all this other stuff. Understand that rule. It's important to understand. And yeah. But again, my TOS account on the right side has got like it's got like $75,000 in it or so, right around 75. So we've got a bunch of money in it already in both accounts. So we're trading well. We'll see what we get. I might buy this dip here in futures. I'm gonna take the micro NASDAQ and limit my size a little bit first. Let me see if I can get in fast enough on this dip. All right, we're gonna take 2 contracts here. 2 contracts. This is our 100K account. Boom, we took half off. We get out the rest there. So we just scalped about 20 bucks here. Yeah, about 15, 20 bucks. That's good. All right, so we got a big pullback here. I'm gonna buy this dip. There we go. We got 2 contracts here. We're gonna take half off. See if we get another bounce. All right, we're out. So again, not bad here. Kind of grinding up some money in this account. Yeah, I'm looking at Schwab. I'm pretty sure 0 stocks and ETFs. Okay, so yeah, they're cheap. Okay, good. All right, cool. Alright guys, so we did get another dip. I'm going to buy this dip again and see if we get a bounce. 2 contracts again. Very similar to day trading stocks here, chat. Alright, we're going to take half off, lock it in, see if we get another follow through bounce. There we go. I'm going to go ahead and cut the rest off there, lock it in. Yeah, we're up about 30 bucks on this account already. Not too shabby. We'll take it. We might buy this a dip again here on the support level. We're right into a pretty major support level here. We're just trying to grind up some money. We'll take 3 contracts, a little bit larger share size than I've been taking here, and we'll add up to 6 because we have a cushion, right? So the system I use on these funded account programs is I build up a cushion first, and then once I have a cushion on the day, then we add more to it, right? And we take some larger risks once we have that cushion. That way, if I lose, again, we're close to flat. You can see we're down on this trade. We're pretty close to flat right now. But if I make money on it, we can start getting some larger gains with limited risk. All right, so again, we're still here at the support level. All right, so now we're in 7 shares, or 7 contracts, I mean. All right, boom, just took half off. Again, locked it in, take a little bit more off there. Lock that in, spike it up again. We'll take a little bit more off there. So yeah, we're up almost $100 now on this trade, or on this on the day here. So up about 100 bucks. So again, I hope you guys can see what we do. We kind of build up that cushion, scalp it. So this isn't options, Don. This is futures. So when you hear contracts, it's not futures, or it's not options contracts. It's futures contracts. So the futures market was originally created for farmers. Farmers would grow commodities and crops, and by the time it came to yield those crops, prices had fluctuated. They didn't like the volatility, and so they started selling speculative contracts, locking in the price of crops to investors so that they could know how much they were going to make by each yield, and they called them futures contracts. Eventually it evolved to where I can day trade the S&P 500, the Nasdaq, you know, some currencies depending on what you're trading. Gold patterns are very similar to blue chip stocks and index funds and stuff like that. So and there's no PDT rule is the best part. Yeah, all good, Don. Again, if you want to try out futures for cheap, you can try out Apex. The base one's like 30 bucks a month, that is. But yeah, like 30 bucks. All right, sorry. Kids came in. All right, we did get a little bounce up here. Maybe I should have held some of these positions, but again, we're just kind of scalping to build up cushions first. Yeah, so our cannabis stock's gonna bounce today with 420 tomorrow. Anything else that looks good today, chat? We might buy this little mini dip, but it's also kind of risky, but yeah, there we go. We'll buy into this. Two contracts. We're going to keep this light. We've already built up about $100 in profit on the day already. And we still got 30 minutes into the open, so. Alright, there we go. A little spike. We're going to cover half of this. See if we bounce up some more. So we took one off and then we're right back up. I don't know what I want to do with this. I might add on and pull back here, chat. Yeah, we're gonna go ahead and add to this dip. See if we get a quick little retracement back up. Alright, we got 5 contracts. Thinking about adding some more to it, but we're flat now. We got a cushion here. We might swing into this cushion. I like this little micro pullback here. So we got 11 contracts here. It's a little bit too large. I didn't mean to take this size. Oh well. All right, let's bounce. All right, we took half off there. Took a little bit more off. Took a little bit more off. 2 contracts left. We'll see if this pumps. We got a beautiful retracement back up. Yeah, we're up like 130. Took a little bit more off there. $140 up. All right, we're gonna go. So yeah, we're up about 150 on the day now. Not a bad little gain here. No losses today yet. So no losses. The scalping system that I use works for me, at least today. No losses today. Win-loss ratio is not showing any losses, so that's nice. Yeah, Bitcoin making some runs here. I eat breakfast in the morning, just not early. So I can't eat breakfast. I'm not really hungry when I first wake up. Usually I have to be up for a few hours before I get hungry. So. Alright, so now we're dipping back down. Yeah, it's no longer expected in June. In June, it's no longer expected in June. It's now expected in September. The last time I looked, let me check it again. Right, so a rate cut is now expected in September, I believe. Yeah, so 25 basis point rate cut is now expected in September. July still expecting a pause. June definitely still expecting a pause, and then in a couple weeks on the FOMC decision on the 1st, overwhelmingly expecting a pause, 96%. Well, what are you trading, Larry? You trading shares, futures, stocks, what? Sell either means typically, and again, this is in general, not for sure, right? But in general, sell means if you are flat on a position, it means short, right? As long as it's easy to short, what's called ETB, which is easy to borrow in shares, right? Those are shortable stocks. ETB means you can short it. If you do have a position, right? So if you are holding a position, right? So say you've got 10 shares and you click sell, you're going to sell those 10 shares, right? And so it just depends on what you're trading. In futures, it's the same thing, right? If I have nothing, I can click market short and either enter a short position or sell the shares that or the contracts I currently have. Things may change if PCE comes down. Well, sure. I mean, if PCE comes in low, if GDP comes in weak, the Fed might be more likely to cut. But I just don't know if those things are going to happen, man. Again, I don't know. I might be wrong. I don't know. But I just don't think they're going to happen. I think it depends on what the data shows up as. All right, chat. We got about 30 minutes until market opens. All right, so we're sideways now, chat. We're sideways. I don't know what else looks good, but All right, so we did bounce up a little bit. All right, so the Fed officially says the Fed Reserve could wait until 2025 to lower interest rates. Yeah, but who said this, right? So I'm pretty sure they're talking about some of the members that spoke yesterday. Amex also CFO expecting modest increases in delinquencies and write-offs this year. I'm pretty sure they're probably referencing. Yesterday we had Bowman speaking, we had John Williams speaking. So my guess is it's one of them. But again, we'll see. It depends on what inflation data looks like. It really does. It depends on what the data looks like. And next week we got a lot of busy stuff too. All right, so now we're breaking under this pretty big support level. It's a pretty major spot too. All right, so again, we're very flat here. There's just not much going on. What's gold doing? I know Bitcoin up to 65K. Gold sitting at 2390s. So, all right, so we're bouncing back up. Very flat though, chat. Let me see if we are currently up about $140, $145 is what we're agreeing on our 100K combine that we started yesterday. Challenge. We're in a bunch of positions. Right now, we're not really day trading though, but we're in a bunch of stock positions. The market's just flat and choppy right now, so we're kind of doing stuff on the back end. But we're not really in any major positions right now, chat. We're just not doing much. You know. All right, chat. All right. There we go. Alright, exit out of this. I'm head to the VIX. Are you in a position? I mean, yeah, I'm in some positions. Alright, we're finally dipping down. So we're finally breaking down under the support. I would say we're still in an arguable long-term upward trend. The Q's hitting the 200 EMA and the VWAP level here. So we're going to buy this dip. We're going to take 3 contracts here. Alright, so we just ripped up. We took 2/3 of the contract off. We got 1 contract left. We'll hold the rest flat, see if it bounces up more. If not, we'll get out break even on the rest. Yeah, we're going to get out there. Alright, well. Up $170 on the day now. Yeah, I mean, a lot of people miss trades. Just don't get too wrapped up in it. There's always another day. Am I sad? No, I'm not sad. Sorry, I was working on business in the background. If I got quiet, I'm not sad. You know, I'm just working on stuff in the background here, chat. So I had to sign a business contract for. Yeah, I had to just sign a contract that I was working on in the background. Alright, we might buy a little bit more here. Still got about 20 minutes or so until the market opens. We got 2 contracts here. We'll keep this one small. We've been very accurate today. So much so that where we have a 19-to-1 win-loss ratio on Apex today. You know, 19-to-1 right now. I could have taken profit. Would have just been so small, though. I'd rather just use the room and try to make some more money on a bounce if we can get it. There we go. Alright, took most of that off. We'll get out the rest there. So yeah, we are now up. Yeah, about 190 or so on the day, about 190. Yeah, I mean, I'd definitely lose money, man. I'm certainly not even claiming to be a good trader. Certainly lose money. I lost money a few days ago. So, I mean, yeah, I certainly lose money, you know. I think I'm down today in equities. Yeah, I'm down today in equities. I'm down $17. So, yeah, of course I lose money, you know. I certainly don't live off of my trading profits or anything like that. And if anything, in these funded accounts, I don't even need to get funded, really. Like, my Thinkorswim account's currently got, let me see how much it's got in there. Here, let me put this up so I can look. So my TOS account has about 80 grand in it right now. So like I really don't need to get funded at all. I could, you know, I just don't need to get funded. I do it because it's fun and I kind of just day trade. But yeah, I certainly lose money. I'm not trading options, Rob. I'm trading futures. So people are skipping over starter homes and jumping straight into $300,000 mortgages. That is one of the reasons they're financially failing. Your first car shouldn't be a Bentley. Yeah. But I mean, a $300,000 house is not really like a starter home. Like the person arguing here says 300K is the price of a starter home. Not necessarily. That's an unreasonable standard. I think the price of a starter home, to be fair, it depends on where you live, right? A $300,000 home in Cali is a starter home. It's probably a shack. Same thing with New York, right? But if you buy one in like Texas or Louisiana or Florida, right? Like you can get a decent house for like 200K, like 175, 200K. It's not going to be perfect. It might need some work, but it's a starter home, right? 300, like you don't need a beautiful, perfect, picturesque house, right? And I think you got to look at that objectively. I think everybody wants a really nice house so they can say they made it, right? But a lot of people don't have the finances to really do that. Yeah. Well, we're not talking about Canada. Aside from the fact that Canadian dollars are worth less than the United States dollars, Canada homes are going to be more, again, they're just different. Yeah. Yeah, I'm usually looking for big extension on the downside or upside, right? So a lot of times you'll see me enter a position on like a big pullback, and then we'll ride a small bounce, and then it might keep down, but we're taking profits so quickly on these little bounces that it doesn't matter. It just depends. We're trying to use extension. All right, where's Netflix at? Okay, Netflix is still down, but we're still green on the trade somehow. Yeah, it's not quad witch, right? No, that's not. All right, guys, 15 minutes. Yeah. I can accept that, but John doesn't even have a volume profile visible. Yeah, but I mean, Sam, you're not seeing the big picture that I'm seeing here, to be honest, dude. Like, look, I'm looking at 4 different monitors, right? Like, most of my charts are actually on a different monitor. Like, if you look at, look at this right here, okay? Like, look. Like, I am looking at a number of different indicators and levels. I'm not going to pull this chart up. I'll take a picture of it because it's got, like, my, username and stuff, and so I don't want that up. But again, like, I'm looking at, here, let me do this better. I'm looking at a number of different time frames, a number of different charts and stuff like that on my other monitor here, and this does have volume. Underneath here is volume, right? We do have volume down there. I'm looking at the 5-minute Q chart here. I'm looking at the NASDAQ here with volume on the bottom. I'm looking at the 200 EMA here, the volume weighted average price here. Like, I'm looking at a lot of different stuff on another monitor. Like, y'all see one of my monitors that I'm using to basically just execute the trades. Well, yeah, I'm kind of a purist in nature anyway. Saying no, it's all good. But yeah, I'm honestly a purist by nature. When will you retire? From what? I mean, it depends on how much I need to retire. But honestly, what I'm doing now does not feel like work. Sitting here talking about the stock market for a few hours a day does not feel like work, you know? Oh, in Canada too. I have family in Canada, right? Like, getting a home in Toronto is gonna be a lot different than getting a home in Sault Ste. Marie, Ontario. You know what I mean? Like, it's just a different. Montreal is gonna be a lot more expensive. Like, it's just like the U.S. where you got segments of it that are less and segments of it that are more, right? And I think the problem is, like, sometimes people want to live in these really high cost of living areas, and then they get upset when they can't, right? And it's like, look, man, some luxuries are for the, you know, for the wealthy, and that's life, man. There's a lot of stuff that I want that I can't buy, you know. And that's life. You gotta accept that and understand that. You're not gonna be able to live in the biggest house you ever want. You're not gonna be able to drive whatever car you want. Nobody can really, out with a few outliers. And so, you know, you gotta just be happy with what you got. Like, I'm telling you, if you're in the United States and Canada, your standard of living is probably much higher than a lot of the rest of the world, right? Not all of it, of course. You got some places across the world that are nice, just like here. But the standard of living we have here is high, you know, and that's objectively true. And I think you got to look at that objectively and understand and be appreciative of that. Like, even a $200,000 home here, where a lot of people here are going to be like, oh, yo, that's like a tiny house. Some people overseas would love to live there, you know. And so you got to just be grateful for what we have here, I think, you know. And I think people have unrealistic expectations. You got it wrong, Al. I'm not that rich, bro. I wish I was, dude. You know, originally from TO, now in Ottawa. With how bad inflation is, we can't afford anything. Food is up 50%, housing is up 200%. The economy is terrible, but they lie on the numbers. I mean, the problem is that, like, okay, you can't have one without the other, right? Like, basically, you want interest rates to go down so you can buy a house. The consequence of low interest rates is inflation. You want prices to drop or slow. The consequence of that is high interest rates, right? So you gotta choose which one you want. You know, you're not gonna be able to have both. That's not a reasonable expectation. I think it takes time. It takes time. Like, 2020 was a weird year. Like, a lot of crazy stuff happened, and the economy is still kind of reeling from that stuff. You got to just give it time. Show us your tax return. I'm good, man. You know. Again, I'm not claiming to be super rich or wealthy. I'm not claiming to be some super profitable, great trader. I'm not claiming any of that stuff. I'd rather just tell you, hey, don't copy me. I'm not an investment professional. I'm not liable if you lose. Don't sue me. I have no idea what I'm talking about. And again, I said it once, I'll say it again. I make most of my money from marketing, right? Like, I'm not claiming to live off of my day trading. I never have, right? Now, I'll tell people the truth in a heartbeat. I live off of marketing, you know? I don't live off of my trading profits. I've never claimed to. My channel's called Beginner Trading, you know? I'd rather be honest with people. And again, I don't think people can really get mad at me if I make most of my money from marketing. The example I always use is the same one, where if I'm a mechanic, right, and I start a mechanic forum that starts to get 500,000 hits a month, right, eventually I'm going to make way more money from that mechanic forum that gets 500,000 hits a month than I ever would as an actual mechanic. And can you get mad at the mechanic for it? No. The mechanic might still do mechanic work because he loves to do it, like I'm kind of trading here. But you can't get mad at me if I'm not living purely off of my trading profits. And again, you should respect it that I'm honest. You know, you got a lot of people on YouTube that are not honest, and they're telling you, they're acting like they are living off of their trading profits and just a trading multimillionaire from trading profits, and most of them are just marketers, right? Like, and again, if they're honest, they'll tell you that. If they're not honest, they'll try to make it seem like they are just some type of super day trading mentor guru out here, you know, slanging courses, but really they're making their money in trading. Like, come on now. That's nonsense. I'm assuming you mean 170 to 350A, not 1.7K to 350. Yeah. Yeah, but I mean, Jason, it also has to do with where you live, man. The average home is not 400,000, really. Like, those numbers are skewed because of California and New York, where you have really, really nice homes, right? That increase, that are super, super expensive. That increases the national averages, right? Again, I'm in Texas. I can get a really nice house for 220,000. You know, like really, really nice house for 220,000, right? I'm not saying the numbers aren't skewed. They certainly are. But yeah, that has to do with the US dollar and the gold standard more than anything. But yeah. Like, the reality of it is, like, look, every quarter used to have a certain amount of silver in it, right? And, if quarter still had silver in it, they would be worth way more than 25 cents nowadays, right? So that has to, you know, that's the root of the differences there between now and way back in the day, you know. You know, and as long as you're investing, this is the reason you should invest, guys. If you sit on cash, you are going to lose money. If you sit on cash, you are going to lose money. Like, the problem is you got so many bears telling people not to invest in the stock market that people are so skeptical of the stock market or investing that they just sit on cash. And then when they lose money over time and lose money, then they complain and they get upset. But the reality of it is, if you're not investing, you are losing. Because again, over time, your money will go down because of inflation. Inflation will destroy cash over time, and that's just a natural truth. You can see it over the last century. Inflation will destroy it. You gotta invest in inflation hedging things. Gold keeps up with inflation over the long term. Real estate keeps up with inflation over the long term. The S&P 500 will keep up with inflation for the most part over the long run, right? That's why you invest in these things. The S&P will give you about 10%. Real estate will give you about 5% plus whatever you make in rent or whatever. You know, gold will appreciate. Gold has done better than all of them. It's about 7x, and about more than 7x now, I think, in about 20 years. So these things will keep up with inflation if you're smart and you diversify into them. Again, if you get too wrapped up in politics or the news or whatever telling you not to invest and that we're always about to crash, you're going to miss out on the biggest gains and edge that you'll ever have in markets. And so there's one of the, and again, I'm not saying we're not about to crash, chat. I'm not saying we're not about to fail. The markets are not about to go down. Nvidia is not about to correct. I'm not saying that because I really don't know. What I'm saying is that if you DCA, if you dollar cost average and diversify over the long run, you're almost certain to make money, and that keeps up with inflation over a long run. Yeah, I mean, if you got a 2.5% mortgage rate, I wouldn't move, bro. Definitely don't refinance, you know. I don't know. I don't know about the heights in Houston. I really don't know. ST. I don't live in Houston. All these realtors saying it's a great time to move or buy. Yeah, dude, I hear a lot of mortgage brokers saying the same thing, and it's total crap. Like, it's not a good time. Like, honestly, it's just not a good time. Interest rates are high. You know, the conventional appeal of real estate is you can buy a house and pay less in mortgage payments than you would in rent. Now that's just not true. Like now you're gonna pay much more in rent, or now you're gonna pay much more in mortgages at 7, 8, 9% than you ever would in rent. And rent's not cheap either, so it's a tough real estate time for sure. Commercials also failing, mostly brought upon by technology and people not needing brick and mortar anymore. Retail struggling, you know. All right, Chad, we got 3 minutes. 3 minutes. Let's see what happens. I'm a real estate agent as well. Like I'm a licensed real estate agent too. I don't really ever do any deals. It's mostly for investment purposes, but like, you know. All right, Chad, here we go. 3 minutes. Will the market go up or down at the opening bell today? I don't know. Got a little dip in the NASDAQ chart. Tesla's starting to bounce back. Still down a lot, though. Higher rates means less competition. Oh, yeah, they just want you to buy. Like, the problem with that mindset, you know, and again, realtors and specifically mortgage brokers will tell you that, Matt. He said, higher rates means less competition. Buy now, and then you can just refinance later on. Yeah, they regurgitate that back and forth, right? The problem, really, look at Apple dumping down right now. The problem with that mindset is this. Okay, if you listen to the Federal Reserve, we don't know when we're going to start cutting rates. Right now, they're speculating potentially 2025 or beyond. And so you could buy now, but who knows how much you're going to lose in mortgage payments between now and when the Fed starts cutting rates. And not just when the Fed starts cutting rates, that's under the assumption that rates are immediately going to go down as soon as the Fed starts cutting rates. There's a lag to it. It doesn't happen immediately. It takes like a year. And so if you buy a house now with 8%, you're going to be eating tons of money every month in that high percentage interest. And who knows when the rates are actually going to start going down for you to refinance, right? That's why it's total crap. It's total nonsense. They just want you to buy, you know. A lot of them did really, really well when the Fed did QE in 2020 and brought interest rates down to almost zero. They did really, really well because interest rates were low. It was really easy to sell houses and mortgages. And now that interest rates are higher than they've been in a long, long time, they don't know what to do. Their business has struggled, right? That's what's happening to a lot of them, and that's why they're just desperate right now. Yeah, it's Bruce. All right, guys. Hey, we got 1 minute. All right, Chad, we got 40 seconds. I'll be right back. All right, Chad, we got about 10 seconds. Yeah, that's Bruce, my German Shepherd. He's a good dog. All right, here's the open. Ding, ding, ding. There's the opening bell. Let's watch the Q here. Let's watch Apple here. Let's watch Nvidia here. Red action on the NASDAQ at the open. I wish my voice sounded like this. Sometimes my voice will just turn and it'll sound really, really deep. Is my voice deep? I always thought I had like a high-pitched voice. Top 3 deepest voices in the world right now. I start singing Chocolate Rain in here. I don't know. Sometimes I'll hear my voice and I'm like, man, my voice sounds super high. I'm like Pee Wee Herman. And then other times I'm like, man, I sound like Batman. Tesla's starting to bounce up. It's at 149. NASDAQ at 17.4. Getting some down wicks here. Let's see if we bounce. So we're dipping some more. A rooster? Top 3 in the world, dude. You know? Alright, so we're dipping. I'm going to let the opening bell play out first. We got 2 minutes. We're 2 minutes in roughly right now, so I'm going to let the opening bell play out first. All right, chat. So sideways open again. Tesla bouncing all the way back up over 150s right now, chat. So Tesla over 150s. What about Netflix? Netflix is still down. That's all right. We're still green on the trade somehow that we bought it early this morning. Netflix is spiking up though. That's good. Oh, we're actually green in equities now too somehow. Q bouncing back. Apple sideways. Nvidia starting to run back up though. Again, I guess I'm bullish. Like I told you guys this morning, I guess I'm bullish mostly just because we're down enough. Right, so we're starting to rip. Q was up again over the 200 EMA, over the VWAP. Apple pulling back. Nvidia over 840s. Netflix bouncing back some too. Hey, you'll have to see it. We'll see if it continues. Nike. I bought Nike at the beginning of this week. Where's Nike at right now? Hey, it's up. We're actually green on Nike, dude. Hey, we bought it earlier this week. We were red on it. We added to it. We're green on it. TSM is running up too. John, what's your opinion on the gaps in the stock like Nvidia and Tesla, whether up or down? What's the chances they'll close their gaps? I don't know really what to say there. I don't really have any type of, gauge for that. Yeah. I think generally extension is real. Something gaps up, down big. Usually profit taking the other way happens, but sometimes it turns back and ends up continuing going in the gap direction, and sometimes it completely fills it. And I don't think there's really much to gauge that except for short-term price action. TSM is running up big though. Look at that. Yeah, we bought Nike, a few days ago, and the logic was that it was down a lot, and it was time to buy the pullback, and so we did, and it worked. We're now green on it. Was a red trade. All right, guys, we're very flat and neutral. We're already up $100 and something on this 100K challenge we started yesterday, or we got yesterday. And again, guys, if you want to trade on Apex, this is Apex funded account program where they give you a demo, they test your skill. The good part is, again, most day traders lose. And so when you consider that, again, if you put up $5,000 for your first day trading account, again, you're probably going to lose. But if you start here and you're still probably going to lose because most day traders lose. It's a lot cheaper if you lose, right? The base one is like $30. So they give you a demo. If you can hit $1,500 in profit without losing $1,500 first, they fund you $25K, 90% split. They pay out millions. They paid out over $100 million. One of the most legit in the world. If you lose, you're out $30. It's not the end of the world. We just got funded on this one yesterday, $100K one. That's the one we're up $100 and something on it today. And again, we had to make $6K in profit without losing $3K, but we did that pretty safely, and we made, now we're $100K funded. Again, this is only 207 times 0.2, so it's 80% off right now. So we got this one for $41 right now, about $42. 43, $44 after tax, so pretty cheap. And again, you can day trade short, buy market, sell market, very similar to day trading stocks and futures. There's just no PDT rule. These funded account programs are allowed. And again, if you use my coupon code BT, you'll get the max discount at all times. BT, check it out if you want to learn to day trade. Wait, why top 3, not top 1? Dude, I am the top 3, not type 1 trader in the world right now. All right. When you look this good and you're this good of a trader, and you walk around, looking like excellence every day, I think sometimes you gotta let somebody else be top 2 and 2 and 1. You gotta just be humble enough to recognize and just be top 3 sometimes. All right, market's starting to turn. I might start shorting. Realistically, a lot of stuff's starting to turn down. So I guess we will short this. We're already up about 100, and we're already up something here. Let me see. Yeah, we're up 160 on the day already. So we got a little cushion we can play with. It is Fridays, so we are going to be a little bit careful today. There we go. Look at me. Look at these skills here, man. Just out. All right, so now we're up over 200. Yeah, so we are up 202 on the day. We're actually up more than that net. We're up 210 net, but for whatever reason, it's not reflected. But over 200. Yeah, Nvidia started to turn under the VWAP, under the 200 EMA, rejecting right at that 200 EMA previous closing price. Apple's still consolidating sideways. Q's breaking down. Netflix is flushing down a little bit as well here, chat. We're pretty much neutral on the trade, though. We're actually now red on our Nike position. We were red. We were down like 100 and something bucks, though, earlier in the week. We added to it. Now we're neutral, so I'm just happy with that. It is a Friday, though, so y'all just be careful. A lot of selling going on today because of 420 halving week. Maybe in crypto. Yeah, I mean, I do think that's plausible. That we might get some selling, some unloading this ahead of the halving and stuff like that. All right, so we are starting to bounce up a little bit. I might short this again and try. I'm going to start with just one contract here, though. I don't trust this one very much. I don't know if I want to add to this either. Yeah, I'm gonna cut it. So again, we had a bad feeling. We're still up 180 bucks on the day, so that's good. When does the trading start? I mean, we've been trading all day, dude. We've gotten into let me see how many. We've gotten into 57 trades today, kind sir. 57. People act like you just need to trade all day, every day, and if not, that it's just not exciting, you know? Like, come on now. I'm not going to take trades just to humor you guys. Netflix bouncing back up. We're now technically green on the day. Or now we're basically completely flat. Really, this is a little misleading. This is not round trips. Round trip wise, and when you include scaling, this is about a quarter of that, I would assume, right? This is about a quarter of these trades. So realistically, we probably have traded about 20 times today, give or take. Our commissions aren't that high either. Like you can see, we're netting $180 on this 100K account, right? So we're netting 180 on the day. This is net. We're netting 180. So, you know, it's not like we're losing a bunch of commissions. Well, 50 trades round trip. We probably, you know, like I said, we probably traded maybe a quarter of those, you know. But again, we're scalping, right? So yeah, we're getting in a bunch over and over again. People can make fun or complain, but again, my graph looks good. I'll take it, you know. Netflix shows minus 46.50 today. Yeah, I mean, Netflix is down because of earnings. They dropped a lot on earnings. But again, what we did was we bought Netflix. We bought Netflix this morning after the drop, and then rode the bounce, and then took profit, and now we're sitting on about 30% of the original trade. We're red on it now. It's since reversed since I said that, but we're basically now we're green. So yeah, I mean, we're slightly green just because we bought the bottom and sold on the bounce. Nike bouncing up, Netflix bouncing up a little bit too, so we are getting a rebound in the NASDAQ. Look at the Q up. Nvidia is starting to rise as well. And again, I talked about this earlier. I would guess we're going to go up a little bit today just because we're down the last few days. Well, guidance is always one of the most important metrics, I think, in all honesty, you know. If we get a little pullback here, you could argue a cup and handle breakout pattern, but I don't know. Nike, we're green on the position again. Somehow. Alright, so we are pulling back a little bit here. There's a dip. We might buy this dip. See if we can take it. A little cup and handle-esque pattern. But again, maybe not. I don't know. We're trying to trade small. The volatility is actually kind of high. We got some cushion on the day. And if we lose, it's not the end of the world. Add a little bit more, fix our average here. Just getting punished on the backside. Again, if we lose, yeah, we're getting punished. Such a huge drop, fake out. But yeah, we're still up $100 or so on the day. I don't want to push it anymore, to be honest. We're losing, you know. We're kind of chipping away at our green day. Again, it could be worse, right? It could be worse. But that's just a big turnaround. Maybe we continue to go up, but the market's kind of showing flat action here. Where's my graph? Where'd it go? Let me pull up a different graph. You know, here's our P&L. So, I mean, it could be worse, but good win-loss ratio. Turning all the way back down to very flat open. Again, it's Friday, chat. Yeah, Nvidia bouncing off that 200 EMA too. Maybe that's what it was. Alright, we're chopping down here, guys. We're chopping down. Alright, guys. I'm probably just going to go ahead and get out of here. Before we go, though, check out our sponsors here, if you haven't already, chat. One of my sponsors is a company called Chart Prime. It's a trading view service you can use in stocks, crypto, forex, futures, anything with a symbol on trading view, you can use it on. And again, if you check out like the strong signals, they're genuinely impressive. So like, let's back test just the strong ones. Right, so again, let's go back. Let's look at just the strong ones, right? Like, watch how impressive this is. All right, so we're going back. This is all the way back to the 17th. So this is 2 days ago, right? So we're going all the way back to 2 days ago. Let's back test. I can't guarantee you're going to make money. They're a sponsor, so I'm biased. Always test it yourself, figure out what works. But the strong signals on the Oracle are my favorite ones. Look at this. Strong signal here, nice breakdown. Strong buy signal here, beautiful rip up. Strong signal here, beautiful breakdown. This is like hours of breakdowns. This is a 5-minute chart. Look at this strong signal here, breakdowns. So none of the strong signals have failed over out of 1, 2, 3, 4. 4 out of 4 worked so far, right? 4 out of 4 worked. This one worked. This one we got a little pop up. This one worked, right? So 1, maybe 2 out of 6 or 7 didn't work. So over 75% accuracy. And again, you can kind of see how anything with a symbol on TradingView works. Oracle back testers, oscillators. It's $40 a month. Again, I can't guarantee you're gonna make money. Nobody can. Always test it yourself. Always test it yourself. Y'all be safe, and yeah, I'll see you guys later. Again, here's the link. Again, you can also check out Apex. It's a funded account program and futures. You can get 40% off. It's like $40 a month. One good trade can pay for it. So again, if you want to check out Apex, look at this sell signal that showed up, and then we have gotten a breakdown from it. Big things down there. And again, they are a sponsor. I'm biased about Chart Prime. Also, again, check out Apex if you want to day trade with me. Again, today we're up about $100. We were up 2+, but we gave it back to the market. And that's okay. That's how it goes. But again, I can day trade short, buy market, sell market, in futures. There's no PDT rule, all that good stuff. And again, if you want to check out Apex, a great way to learn how to day trade with limited risk. Again, most day traders fail. Most day traders are going to lose here. They're a sponsor. Of course, I'm biased because they pay me money. But again, I genuinely think it's good for traders. If you lose, it's not the end of the world, and that's a lot better than putting up 5K and losing that. And I think putting up thousands and losing it in the beginning is very common, and this avoids that for new traders. And so again, they're a sponsor. I'm biased. Check all this stuff with them. Apex has paid out over 100 million. Check it out. Here's the link. But yeah, I'm out of here, guys. Y'all be good. Love you all. Y'all have a great weekend. Y'all be safe. Again, looks like we're going to be doing a crypto show. Let's try to do a crypto show. We're either going to do one Saturday or Sunday.